So as we know, interest rates are continuing to go up and up and up, guys. And this is no surprise. Unless you've been underneath the rock, you know interest rates have just been skyrocketing. And so I want to go over interest rates so that you guys actually see exactly where these interest rates are going and what do I think is going to happen in the future and what's going to cause interest rates to continue to go up and slow demand. This is a very, very, very important video that you should watch all the way through, guys. But before we jump into that, my name is Orlando. Make sure you hit that like and subscribe button, guys. It really does help out the channel. Check out in the description and pinned comment. I have a newsletter that I talk about things that I don't talk about on this channel. You need to join it, guys. It is free. How can you beat that?
Your ideas are intriguing to me, and I wish to subscribe to your newsletter.
But let's jump into this, guys, because this is important. Let's look at where interest rates are right now. Take a look at this. A 30-year fixed mortgage right now at a credit score of 700 through 719 is 8.001. Now, if we take a look at this chart here, which is the blue line, we can see that it's kind of leveled out, right? It did shoot up. Oh, it did shoot up from that 7.5%, a little bit over 7.6, and now it's at 8%. I mean, guys, listen, if you've been watching this channel, you know that I've been saying that it's going to continue to go up. The point of what the Fed is doing, even though I think the Fed should have just ripped the Band-Aid off and quit trying to play this sit on the fence game, they are still raising rates. And as they raise rates, we can see here that it's continuing to go up. And it is spoiling demand, guys. It is stopping demand that individuals are like, the way my account is set up, I'm not gonna buy a house right now, especially with these houses being overpriced. But let's continue, guys. Let's look at the next. Let's do 680 to 699. We can see it did shoot up. Now, once again, if your credit is going down, you expect it to go up. And that's what's happening here. A 30-year fix, we can see this is at 8.152%. And we can see it's gradually going up, guys. So this is super important, as I have been saying to you guys over and over and over, that you have to sit on the sidelines with a purpose and not just sit on a hand, twiddling your thumbs, thinking that a house is magically going to fall in your hands and that you can just, do the same thing that you did 2 years ago, a year and a half ago, and think that things will work in your favor. They will not. I promise you this. We're in a different era. Get over it. Whoa! Especially the way that these banks are operating now. They are asking for a lot more and putting a lot more restrictions, that the amount of money that they're giving out, that pre-approval that you got, 6 months ago, it's not going to work. It's not going to work. So you have to make sure that your credit's together, your liquidity is together, that your debt is together. You have to make sure all of these things are together if you are to find a deal in this market. But let's continue on, guys. Let's go to 660, 679. It went up again. Surprise!
This is the worst.
It went up to 8.2%, guys. Let's go a little bit further. Let's go to 640 to 659. Ooh. Did we go there? Oh, did we go there, guys? 8.6%. Guys, it's not looking good, and it's going to continue to get worse, guys. It really is. And I would hope that you would understand that it's going to continue to get worse. The rates are going to continue to get higher and higher and higher. Will they get to 10%? I don't know. They might not, but the way that it's looking, there's still a bunch of pain that's going to happen in this housing market.
Orlando, what about inventory? Inventory.
Well, inventory is creeping up, guys. It's crazy, right? A lot of individuals who have bought homes, foreclosure, repos, all of these things are going back up. People are giving houses back. They are giving houses back to the bank because they overpaid. They bought houses. Now, it may not be a dramatic, ridiculous houses raining from the sky amount, but we're actually seeing foreclosures go up. We're seeing that number rise. I've done videos on it before, and it's continued to go up. And then we're also having in the market, more people on social media are starting to complain about making ends meet.
Is anybody else broke as
right now, like me.
Yes, girl.
Do I need 5 jobs?
Bro, this is just getting out of hand. At this point, bro, I'm just gonna stop eating and lose a bunch of weight because this is getting crazy.
And this is something that we have been talking about forever on this channel, guys. I have been telling you guys that repos, foreclosures, people living paycheck to paycheck, inflation going up, apples costing $4. Remember that? I've been telling you guys this. Make sure that you pay attention to your credit cards, pay off your debt because it's going to get harder. And just now, we're starting to see people say,
I can't live on this. This amount of money that I'm living on, it's getting tough out here.
when I've been calling it out over and over and over, especially if you're trying to buy a home, that is going to get tougher and tougher as inflation goes up. And here, I know, these CPI numbers are telling you 3%, 3.5%. You know, that's all inflation is. It's going down. But let me ask you this, guys. If inflation's going down and supposedly everybody's getting relief, why are we starting to see more and more individuals say, it's getting hard out here. I can't live like this anymore. I can't make ends meet. I can't pay rent. I bought a home and I can no longer pay the mortgage on this home anymore. So when people ask me, Orlando, when are rates gonna get back down to 2%, 3%? I go, you're gonna be waiting a long time. You should not want rates to get down that high, especially if you're in the market to buy a home. You should not want that. What do we say on this channel, guys? We say you should care about the price more than the interest rate. The interest rate is just a tool to stop the demand. That's what's going to continue to make houses go up, up, and up. The lower you get the interest rate, the higher the price will be. The more you make the interest rate, the more homes will come down in prices. So, in actuality, 10%, doesn't sound so bad, but it's going to affect you in the short term because you're going to have to take that rate. But you're going to get a good deal on a house. At least that's the concept. That's the theory that I hope that you're looking at. So let's talk about inventory. And I just want to talk about some things that are happening in the market right now that will affect some of this inventory. We just saw Evergrande, guys. China's biggest property developer or whatever, right? They claim bankruptcy. And, I did a video, not to pat myself on the back. But I did a video a long time ago explaining that this was gonna happen. The writing was on the wall, guys. It just really was. But here's the thing. How will it affect us? That's really the thing that everybody wants to know. It says Evergrande's debt, over $300 billion in liability with missed U.S. bond payments, a potential global impact, possible slowdown in global economic growth, U.S. bonds market, rise in long-term bond yields, influenced by Evergrande's situation. Long story short, they're gonna miss some payments on bonds, which is going to mess up the bond market and whatnot, which will affect other companies. If you think Evergrande didn't buy some homes in the US, you're crazy. China, this company came into the US market and bought up a lot of properties. Now, with them claiming bankruptcy, a lot of these properties will come back on the market. Do I know exactly to the tune of what amount? No, but you have to understand that some of these properties will come back on the market. But here is another thing that I don't think a lot of people are talking about. Who is connected? Who is connected with Evergrande? And now that they're going bankrupt, who bought into Evergrande? I think it's at the tip of my tongue. It starts with a B. BlackRock. Let's take a look at BlackRock. It says here, BlackRock, HSBC among the largest buyers of Evergrande debt. So they bought into Evergrande. And it says here, in January and August 2021, pushing its stake in the company to 1% of the assets in its 1.7 billion Asian high yield bond fund. So that means that BlackRock is taking another hit, guys. Another hit by Evergrande claiming bankruptcy. How will it affect BlackRock? I mean, it's gotta hurt. That's my point. And BlackRock is one of the biggest, we know this, guys, we've talked about it on this channel. They're one of the biggest individuals who bought all of these properties and trying to put them on the market. And we all know BlackRock literally put out that they were stopped buying residential homes and whatnot, right? So what's going to happen now that they're taking a hit on that? Now that they're having a bunch of redemption calls on their fund, it's not looking good, guys. It's really not. I could see some of these properties not not only coming back on the market with Evergrande, but coming back on the market that some that BlackRock bought themselves so they can get a little bit more liquidity in their coffers, guys. So I see that. And I'm thinking about doing a video on this. So take a look at this, guys. I mean, Airbnb hosts, you're not going to like me. They're not going to like me for this one. But I kind of told you so. I knew this was going to happen. And yeah, take a look at this, guys. There are 3,329 homes for sale in Austin versus there are 12,127 Airbnbs in Austin. Oh, man. Look at the picture here. You see Austin with a couple of dots on here. Then the Airbnb one looks like a culture dish from, you know, those swabs of bacteria. You look at the microscope and you be like, yep. There's a lot of bacteria here. That's what this picture looks like. So if you guys would like to want me to do a video on that, I can do a deep dive into that and just put it in the comment section and say, yeah, I want you to talk about that. But guys, this is how the inventory is going to get back on the market. You can't tell me that everybody in that Airbnb area is listed up. A lot of these properties are going to fail and they're going to hit the market. And Austin isn't the only one that is running into issues like this, guys. So this inventory thing that I know I hear a lot of people talking about, it's looking like it's going to shore itself up, you know, in prices. So we'll have to see, guys. Obviously, nothing is guaranteed in this housing market, and we'll see. But this is the reason why videos like this are so important, so that you can see this stuff coming and read in between the lines and understand what's going on in this housing market, so that you can get a house and get the best deal possible for you and your family, guys. As always, guys, you won't get all of your information off of this one video. Come on now. You know you gotta watch this video here. It will help you with the housing market, financial news, get into your first rental property, guys. I promise you the information you will get from this video, it will be gold. I'll see you in the next one. Thanks.